Hey, Bill Gross here, the LA Probate Expert.com, with my weekly update on the real estate market. And I found a great article from a group called the technicaltraders.com. It's got a lot of attention. The biggest topic I get is, are we headed for a housing bubble? More importantly, a correction in prices. Now, I don't have a crystal ball, and there's a lot of factors going on that could affect the market. This particular analysis, though, is technical, meaning not anticipating future factors, but just looking at the numbers and what they mean for the future. Let's take a quick look at that. I'm going to show you this group had a article out last week and then another one this week. I'd like to go over in detail. First, they showed last week the U.S. Mortgage Banker Association Purchase Index showed, while it's been going up continuously over the last, let's say, 6 or 8 years since the last housing bubble bottomed, it has continued to go up nonstop until recently it's turned down. And it indicates a significant drop in activity for the period of July 2021. Big reversal. So that's troubling because people have to apply for a mortgage in advance of buying a house, and less people planning to buy houses means inevitably less houses being bought. Then they came around with a second article that I linked this week in the email and down below. Home buying trends showing signs of an extreme bubble setup is about to burst, number 2. And they look at a couple different things, pending home sales dropping. And as an agent, we feel this. We've gone from the supernatural numbers back to a more natural market in terms of pending sales. But they go further and take the Case Shiller 20 city composite index of price appreciation and show that while the trend line has been going up, and during COVID we were way above those numbers, it indicates that really the market should adjust down about 10 or 15%. This was a great indicator of where the value was headed back in the last bubble. When prices dropped, it told us right away they had to drop, couldn't go on forever. And then it projected over the last 8 years the growth we've experienced. So this is a troubling sign that inevitably the market has to adjust 10, 15%. Now, it can happen over time or it can happen quickly. It happens quickly when there's a triggering factor like rising interest rates or a war or a major global depression. It might correct itself over time, over the next year, 2 or 5 or 10 years, and just be a change in direction, yet having some significant consequences. What's that going to be? There's no way to know. What's the best advice? What I always tell people is, if you have to sell, sell. Get it on the market, get the buyer locked in so they're committed, so they're able to close. Make sure their loan rate is locked in. If you want to buy a property and you plan to be there 10, 15 years, you want to get your contingencies waived and your rate locked in the same time so that you're not caught where you're locked into a deal, but your mortgage rate goes up 1 or 2%. That's happened in my career a couple of times. I'm here to help you avoid either one of those situations. So if I can help you, whether you're buying or selling property or investor looking to make a good deal to invest your money, let me know. Bill Gross, the LA Probate Expert.com. Make today your best day ever. Thanks.